I've been asked about many stocks in my comments during the live streams that are not investments, they are trades. So I'm encouraging you to do the research, be honest with yourself, have an understanding of what you're getting invested into so that you're incorporating investments that you can hold for 5 years plus through a double-digit drop like we've had earlier this year, but has now recovered like a Google or Nvidia. Definitely trade status when it comes to these next two I'm going to show you. Things that you have to know how to navigate your way quickly in and out of. ChargePoint down 98% over the last 5 years. Snap Inc. down 88% over the last 5 years. Today, we're going to be going over a simple strategy that will have you on track to build wealth. And it's even simpler than what we've looked at so far. We're not going to be choosing individual stocks. We're going to be choosing ETFs that track those quality companies. We'll be looking at 2 foundational ETFs and 3 growth ETFs. The Vanguard S&P 500 ETF, VOO, and the Vanguard Total Stock Market ETF, VTI, plus some ETFs for that additional growth. We're going to look at VGT, Vanguard Information Tech ETF, MGK, Vanguard Megacap Growth ETF, and VUG, the Vanguard Growth ETF. Things that you can make a simple 60-40, 70-30 investment plan using these funds. No guessing, just having exposure to those industry leaders. Not penny stocks, not the next big thing. The companies that are actually proving themselves and winning right now. Nothing trade status. Not that there's anything wrong with trading, but make sure you're pairing that with a plan on how to build long-term wealth. Trading requires attention, precision, constant attention, and that plan of how you're going to get in and out in profit. Investments steadily grow. They compound, they recover after those tough times. That's the difference. So make sure you're creating a portfolio that will have you on track, not filled with trades, filled with investments, so that you're not constantly having to restart, cut underperforming investments, interrupting your progress. Now let's address a question that I've seen many times. Which is better, VOO or VTI? I hold both, but my encouragement to someone getting started out is to just choose one. There is an 88% overlap between these two funds. But before we get further into the details, I'll share a look at 2 of my positions into both of these funds. Now, they weren't built at the same time, but just to show you what I've achieved over the last few years. When it comes to VOO, I'm currently at 51.29%. And when it comes to my VTI position, I'm up 60.43%. A lot of what I share over here are positions that I hold in my portfolio. So it's not theory, it's what I've actually done. I've invested into both of these funds in order to give my taxable accounts some amount of stability, a core, an anchor, just like I do in my retirement accounts. Nothing complicated, nothing I'm jumping in and out of, positions that I can truly hold for the long term. So you don't need to be stressed about predicting winners. You need to be consistent. You need to be focused on quality. Let's take a look at the average returns when it comes to VOO and VTI. They're nearly identical. Whether you're looking at shorter or longer time frames. For example, over the last 10 years, VOO on average is up about 15.23%, while VTI is up 15.75%. So to make it even more clear on how close the average performance is between these two funds, I created this chart to show you that year to date, VTI slightly leading. Over the last year, also just up 0.20%. But on those longer time frames, 5 years, 10 years, VOO comes out in the lead, but just slightly, up 1.23% over the last 5 years and 0.48% over the last 10. So those were average rates of returns, but taking a look at these two funds over the last 10 years, VOO is up 312%, while VTI is up 295%. So basically, very similar performance, huge overlap. I definitely would just go with one and then incorporate a different ETF to bring growth, dividends. Now, in today's Too Fun, Get Started portfolio, we're going to layer in some growth in a smart way. Another ETF, not random stocks, giving us a higher concentration into those top performing companies. These three Vanguard funds recently had a share split, making their costs even more accessible and affordable to everyone, even though I always remind you, don't let the price of an investment ever hold you back. Every platform that I use allows me to invest by using fractional shares as low as $1 to $5 at a time. Okay, the three funds, VGT, MGK, and VUG. The Vanguard Growth ETF, VUG, is a broad-based fund that gives you exposure across all of the sectors. The Vanguard Mega Cap Fund gives you a heavier focus into the biggest leaders. And VGT, Vanguard's Information Technology ETF, is going to be pure tech, AI, software, semiconductors. Let's look at some overlap between VOO, the S&P 500, and these funds. And yes, we will be double dipping. There will be some overlap, but in a smart way, making the most important parts stronger. So looking at VGT, we have a 35% overlap with VOO. VGT has 321 holdings, pure technology, while VOO has a little over 500 holdings and exposure to all of the sectors. And when it comes to VGT, you're going to get the highest weighting into NVIDIA, Apple, Microsoft, Broadcom, and Micron. Next, taking a look at VOO versus VUG, we have a 57% overlap. VUG has 157 holdings, also heavily weighted into technology, and the top 5 holdings here are NVIDIA, Apple, Microsoft, Google, and Broadcom. Now we have VOO versus MGK. There's a 51% overlap. MGK holds 63 different holdings, more concentrated, still a heavy weighting into those same names, NVIDIA, Apple, Microsoft, Google, and Broadcom. Different weightings, slightly different methodology, but all ways to bring additional growth to your portfolio. Both VOO and VTI have an expense ratio of 0.03%, and so does VUG, but MGK has an expense ratio slightly higher at 0.05%, and VGT is at 0.09%. When it comes to average return over different time frames, VGT is the leader across the board. And even though MGK has fewer holdings, you're getting a higher concentration into some of those big names by going with VGT. Past performance is not an indicator for future performance, but we've seen tech, AI, these areas thriving. Leaders in these funds, like NVIDIA, anticipated to be on track for a 31% upside from their current share price. So these are funds, all of them, that I would be willing to hold in my portfolio for 5 years plus. So don't make investing overcomplicated. This could be a way to get started, giving yourself a basic foundational investment as well as some additional growth. I'm a long-term investor. I don't want to constantly have to rebalance my portfolio, be in and out of different individual companies. I want to build long-term wealth. And this, what I shared today, is a simplified way that anyone can get started. Don't just be a consumer, be an investor. Own these leaders. Focus on growth, building something real, something for the long term, no matter what your budget is. Have you picked some individual stocks in the past that have failed and might have turned you off to investing? Share in the comments. Hope that this video helped to show you that you can build something stable that will rebalance for you, that will keep you on track. No huge fees, just a simplified way without you having to pick all those individual stocks. I am Lisa J. Stocks. Make sure to subscribe, like, hype, check out my referral links, support the channel, and share your thoughts and comments. Thanks for watching. Okay, bye.